As you know, Visa is the world's leading company in digital payments, but a lot less is known about what the business actually does and how the business makes money. Is the business growing? We know Visa and MasterCard have a monopoly, so does Visa have a strong moat? And most importantly, does Visa have the potential to yield good returns for an investor? And is it undervalued in the current market? I'll be taking a look at Visa and their most recent earnings report for Q1 and their fiscal year for 2024 to see if the stock is potentially undervalued in the current market. So to start off, what does Visa actually do? In basic terms, Visa is a network that connects banks and financial institutions globally by authorizing payments securely from one party to another, so money can be transferred from one party to another seamlessly without much effort. They do this by contacting your bank and checking your bank balance and ensuring you have enough money to pay for this transaction. Then taking the money owed and giving it to the merchants and putting it into their account with whatever bank they're with. And they do all this authorization within seconds. So you could essentially call them a middleman for making transactions seamless. And of course, they take a tiny percentage for every transaction made. Moving on to the fundamentals now. We can see here that Visa's revenue for the quarter was $9.5 billion, which is up 10% quarter over quarter. And for the full fiscal year, it hit a record high of $36.8 billion, which is also up 10%. I would also like to mention, as you can see here, that Visa's 10-year average revenue growth is up 11%. So the company has a very steady growth rate, and growth historically has never seen a significant dip excluding COVID-19. Now, the most important metric when looking into Visa is free cash flow, because unlike Amazon, which we covered in our last video, Visa puts a very small percentage of its earnings back into reinvesting into the company. Now, this isn't necessarily a bad thing. Visa has one of the world's strongest moats with a 40% global market share, and there really is very little room for the business to expand. Therefore, it is better to look into free cash flow because it represents the true cash profit of the company that they could in theory return to shareholders. With all that being said though, taking a look at the actual figures, we can see that over the course of the fiscal year, Visa's free cash flow declined by 5%, which is naturally well below its 10-year average of 10% growth. Now, this isn't really a good thing to see, but it is due to Visa's higher customer incentives. Looking at what Visa actually does with its free cash flow, we can see here that they do in fact pay a dividend, although it is only 0.7%, so it's not really that high, but we can see here that they have been increasing it by 14.5% annually over the past 5 years. Share buybacks also have been good, and they've been decreasing their diluted shares outstanding by 8.7% over the past 5 years. Now, this is amazing for shareholders as it does increase shareholder value. If we're looking into Visa's potential growth, I will be looking at Visa's revenue segments to see what is their most profitable revenue segment and what has the most potential for growth in the future. Now, the revenue segments for the business are split into 4 income segments: service, data processing, international transaction, and other revenue. And they have one outgoing segment, which is labelled customer incentive. The main segments we will be focusing on today is data processing and international transaction revenue. And excluding the segment other revenue, which is a very small percentage of the business, these are the fastest growing segments of the business. Data processing revenue is the most important part of the business. And with more and more people moving digital and more people using Visa's tech, Visa will continue to capture this growing market. International transaction revenue is important because it means that people and businesses are sending more money overseas and or people are travelling more to countries that require currency exchanges. Briefly, I would like to mention margins because another great thing about Visa is its payment infrastructure costs very little in comparison to the money it generates. Now, this is because Visa's massive scale is a globally utilised service. Now, taking a look at these margins, we can say they are very impressive. They currently have a gross margin of 78.76% for the quarter and 80.4% for the year. And looking here, we can see that the 10-year average gross margin is 80.8%. So this is obviously great because it highlights the stability of Visa with it maintaining the same gross margins for basically the past 10 years. Most importantly though is the free cash flow margin, which we can see here is currently at 52%, which is just absolutely crazy. This shows to us that Visa produces an insane amount of free cash flow from its overall revenue. Again, looking over the course of the last 10 years, we can see that Visa's free cash flow margin has remained basically the same on average, which highlights to us yet again the stability of Visa's business and their track record of maintaining amazing margins. Now, to truly understand how good Visa is, we're going to compare it to MasterCard, and we're going to look at dollar transaction volume, which shows us the amount of money going through their networks. So for Visa's trailing 12 months from June 30th, we can see that customer credit was $5.3 trillion, up 5% year on year. Customer debit was $6 trillion, up 9% year on year. And commercial was $1.6 trillion, up 7% year on year. So all this means that the total nominal payment volume was $13 trillion for the trailing 12 months, which is up 7% from the year prior. So if we compare that then to MasterCard's customer credit, which was $3.4 trillion, up 5% year on year. Customer debit was $4.8 trillion, up 10% year on year. And commercial was $1.2 trillion, up 10% year on year. So this means that the total nominal payment for MasterCard was $9.7 trillion, up 8% year on year. So here we can see that Visa has a far superior payment volume compared to MasterCard, but MasterCard is growing slightly faster, and if they do have a cheaper valuation, this will be bad for Visa. I do believe that if you want to talk about Visa, you have to talk about all the litigations that come with it. The DOJ has repeatedly hit Visa with antitrust lawsuits because it is clearly a monopoly and does only have a small amount of competitors. This does give the impression that Visa could be doing things a little bit shady, the most recent case being that Visa was accused of threatening merchants with higher fees if they start to use other platforms to process transactions. Now, I'm not here to comment on whether these claims are true or not, but this does undoubtedly affect Visa's business. Sometimes Visa does lose some of these cases and does have to pay out billions of dollars, which does affect the business. Now, with all that being said, I don't think they're a huge issue for Visa, but it is something to consider when looking into Visa. I will be using Stock Unlock's DCF calculator for the next part of the video. And if you would like to use the tools that we use to perform our analysis, go to the description where you can get 10% off your first year of Stock Unlocked. Getting straight into it though, I will be setting the free cash flow annual growth at 9%. While this is below the 5-year average of 10%, last year they did see a drop of 5% in free cash flow. Now, this is due to customer incentive, but that is likely to increase at least for the first half of 2025. However, it does seem that Q1 for Visa was particularly a bad quarter, but I won't lower it past 9%, especially with the trailing 12 months for Q1 being 9%. Now for shares outstanding, the company doesn't seem to be slowing down on buying shares, so I'm just going to leave that one the same. And as well, for dividend growth rate, I don't see it slowing down, so I'm going to leave that the same as well. So I will be using a price of free cash flow of 30. Now this might be higher than what you would have expected me to say, but with the safety of Visa's business and the amount of free cash flow it generates from its revenue, I think it's well justified. And with the 5 and 10 year averages being basically around 30, mostly 31, I think this is very reasonable to say. But anyways, with a discount rate of 10%, it gives us a fair value of $347.50, which is about 11% below the current market value. And it could return investors 12.3% annually if it does continue to grow at 9% free cash flow yearly. Which I would like to add is not really a crazy figure for a safe business like Visa. Finally, I do think Visa is a good company with a very strong moat. It could be a potentially very safe investment and is looking slightly cheap in the market today. However, it is worth considering that with a recession looming, Visa may see some slightly slower growth. Although personally I do believe that Visa is slightly undervalued and could be a safe investment, for me I think there is more businesses out there that could be more undervalued than Visa and could yield me better returns in the future. So personally I wouldn't be investing into Visa, but if you are looking for a safe investment, Visa could be a very good choice. But that's it for today. So if you liked the video, please leave a like and subscribe, as I will be doing a lot more content like this in the future. And if you have any questions or suggestions of what company I should do next, please leave a comment down below.